Yeah, I did, and I added to it, and I will continue to add to it, especially if it's weak on the Ross Stores news. Clearly, Ross Stores is having a harder time with freight and with wage costs. TJ highlighted those areas as weaknesses for them, too, but they have an entirely new pricing initiative strategy that is helping them not only deliver on margins, but actually increasing their margins. It was an extremely impressive quarter with comps, Marmac comps up 3%, and Home Goods was down, and HomeSense, their home businesses, fell 7%, but that's basically because they had a 40 comp last year. So net, you're at 33% in terms of the two-year stack. So very, very impressive. The execution is tremendous. As I mentioned, they actually raised their margin guidance, and so this is a kind of story that absolutely you want to own. You want to own pricing power stories. I'll give you a couple of others, not in the retail landscape, but you want to own something like a Schlumberger, because they got pricing power. Their margins are going to expand 200 basis points this year. You have you also have Emerson Electric. You have Dow Chemical. Dow is actually increasing prices by 20%. So there's a lot of stories that you can find in this place, I think, in the market. And I think we just got to look at the Walmarts and the Targets and now the Ross Stores as almost like one-offs.
Because it's very difficult, Jason, to make a blanket statement like you can't own the consumer now because of what you got from Walmart and Target. You just have to own the right ones, and you have to own the ones that are executing better than the others. Now, unfortunately, a lot of times you don't know that until the tide goes out and you find out who executed better and who didn't. But just to say a blanket, don't own discretionary, don't own the consumer, may be too severe.
100%, Scott. I mean, obviously the narrative, there's conflicting narratives just on the state of the consumer. And I understand, obviously, Walmart and Target are major bellwether stocks. You know, Steph has talked about in the past on double ordering and inventory. I mean, that was a problem here with Target, and obviously they had some operating margins losses here, and that's also experienced little bit of a different experience with Walmart with wage pressures that. I think you're right, Scott. I think you really have to be discriminating in terms of what names you're looking at here because, as Steph mentioned, pricing power and margin expansion is the story to really make sure that you're looking very closely at in an environment where inflation is still a major theme and will be with us for some time. So I think it's very important to make sure that we're looking at margins very closely. The consumer is still relatively healthy, not as strong as they once were, but they still are relatively healthy and are still spending.